Let's welcome on board our experts, Nischal Maheshwari on the show with us, Naresh Mirani too. Nischal, hi, afternoon. What is it that you're making of this extremely volatile market and complete disconnect from what the Western markets at least are doing, both Europe as well as US?
So, afternoon, Aisha. I think some amount of profit taking is happening in India, basically. Yes, it is a bit of a disconnect. If you compare this, basically, that's been a very solid market as far as US is concerned and even in the Southeast Asia. But here we are seeing some amount of profit taking, some amount of disappointment as far as earnings are concerned in the current quarter. I think mostly if you really look at it, all the consumption companies have been reporting slightly subdued numbers. And obviously, Bajaj Auto results were really bad. So I think that's what is actually taking a bit of pressure onto the market.
Okay, that's the pressure point. The earnings haven't been that great, and of course, we had run up ahead of earnings. But Naresh is also with us on the show. Naresh, hi. What do you make of this reversal that we are seeing of sorts in Bank Nifty? Quite a bit of traction today.
So very strong reversal on the Bank Nifty. It has crossed the recent swing highs, very similar to what 25,200 top, which was there on the Nifty. So strong reversal, and that is changing the whole momentum on the markets. And also the fact that we went below 24,700 made a reversal. So it looks like a classical false breakdown. And in that case, 25,200 crossing on the upside would be a major confirmation on the Nifty. Overall, there were divergent moves in the downside tick in the last few sessions. We did not see a similar downtick on the Nifty Bank, the mid cap and the small cap indices. So we are back into an uptrend. And globally, things still seem to be very fine. So trying to be more stock specific, the bias still remains positive.
Okay, the bias still remains positive, but what's the view, Nischal, when it comes to Manappuram Finance and some of these gold financiers and the issues that they're going through right now? Is this dip a buying opportunity or just stay away?
I think for the moment it is a good time to stay away because I think RBI again and again is coming and very clearly telling them that to go slow. And this whole thing earlier it has been with several other NBFCs also. And similarly, I think here also, first time RBI has now picked up MFIs. So Ashirwad basically, which is 100% subsidiary of Manappuram. I think they may be coming after the MFIs also. So I think that's a very clear guideline which RBI or not a guideline, but a guidance which RBI is saying that go slow on the growth part. So I think in that kind of a scenario where RBI is giving you a hint, it's best to avoid all the NBFCs for the moment.
Avoid NBFCs. That, of course, is the word coming in from Nischal. You've got Kotak, you've got HDFC Bank all reporting their numbers this weekend. And then, of course, Axis. That is one stock which actually is standing out, although the Q2 one-offs is what has actually led to the pad beat. Nischal, early days yet, but anything to take away from Axis Bank's performance?
No, I think a bit subdued as far as growth is concerned. I think growth was a bit subdued, but I think they have done very well as far as the quality of asset is concerned. So there, I think that's why I think the market is also giving them a thumbs up there. So quality of assets is very good. Provisions they've increased the provisions basically partially out of the tax break which they've got. So I think that's why you are seeing good momentum there. But I believe, as I was telling earlier, they are also taking a hint from RBI, saying that go slow on the asset side. So that's why I think they are also going slow. Maybe you will see similar kind of a trend happening across all the whole sector. As the results get done, basically everybody is taking a cue from what RBI. And I think it was a big concern also, if you really look at it, the kind of growth which we are seeing on the credit side, that was really very aggressive in the last few quarters. And I think some amount of moderation was expected. This is what is happening also.
Some amount of moderation was expected, and it seems like it's a day which has been marred by regulatory issues or some sort of action coming in on the policy front, Nischal. And I'm talking about the CGD space now. The city gas distribution is taking the hit on account of the APM allocation getting cut, very sharply. If I have it right, you do have coverage on a few of those city gas distribution names. What would you recommend investors to do right now?
So, Manisha, I have left Centrum, so I am on my own basically, and so that's why I do not have any coverage now. So that was my previous organization. But I do understand the space. I think this is a bit more than what the market was expecting. And that's why you are seeing this kind of a negative reaction. But I think this was sort of expected. I'm saying the amount may be much more than what the market was expecting, but the cut was expected. So I think that's what we are seeing at the moment. But our earlier pick used to be MGL only.
Okay, so that's the view coming in as far as the city gas distribution space is concerned. I think I made a folly with the brokerage house earlier. You made the folly with my name. It's Anisha, not Manisha, but nonetheless, that's the view coming in as far as the entire sector is concerned. But let's hear out the expert opinion.
My apologies.
No worries at all about that. But let's hear out the expert take on that. Maulik Patel, the director from Equirus Securities, joined us earlier to talk to us about what he thinks of that sector.
Everyone has to increase the price if they want to maintain the margin. The price increase for the CNG customers can be in the range of around 3 to around 4 rupees per kg. Given that there is state election in Maharashtra next month, MGL will find it a little difficult to pass through the entire the price increase. For IGL and Gujarat Gas, we expect that they will do in the 2 tranches, probably one immediately, and one probably a couple of weeks down the line. ONGC is not a primary beneficiary other than that the C2, C3 or the Opal plant, which has been in a loss making. If you have read the news that a couple of months back, the government has given a large package to improve the financial position of the Opal, which is a subsidiary of ONGC. So obviously, Opal will benefit because they will get a lot of cheaper gas.
Right. Okay, that's the take then coming in right now on what to do with CGDs, which are definitely seeing quite a bit of slamming still. But the one stock which has made a marked recovery has been Polycab. We just highlighted that for you. While the earnings, of course, were a disappointment, but the conference call details are something that the street is sort of heaving a sigh of relief after. In the investor call, they've said that they are going to stick by with the guidance of 20 billion rupees revenue by FY26, and that's going to be achieved in early FY25 itself. In fact, let's first hear out from the management, and then we'll take it across to Nischal.
In the fiscal 21, we had embarked on a project, a transformational project by the name of Project Leap, under which we wanted to achieve 20,000 crore or 200 billion of fiscal 26. Considering the fact that we have already crossed 10,000 crore rupees in the first half of the current fiscal, we firmly believe that we would be able to meet our target of 200 billion in the current fiscal itself. So demand environment is robust. We are getting demand across all the sector. As far as EBIT margins are concerned, we have our strategic roadmap in place and we are implementing that. And in the next fiscal, we should be able to improve on margins. However, in the current year, it's quite possible that we end up having some amount of losses as far as FMEG business is concerned.
Okay, that's a view coming in as far as Polycab is concerned. But Nischal, a bit more color on this building material space. Of course, real estate sector itself is doing well. But if you look at the margins coming in, whether it's KEI, whether it's Havells, whether it's Polycab, the companies are reporting robust top-line growth, but it's not turning into profitability. What should an investor do in this case?
So I think this may be temporary. If you hear to most of these calls, basically, they are saying that it may be just maybe a temporary phase, maybe a quarter or two. Obviously, the issue remains to be the raw material side where the prices have gone up. And that's why, but given that the outlook as far as sales is concerned remains to be robust, I would say basically remain invested. Because if you really look at it on the FMCG side, on the other consumption side, basically the companies are even struggling for the top line. So at least in FMEG, that way, I think the concern is not there as far as growth is concerned. Yeah, margins may be a bit tepid for this quarter and the next. But given that you are now getting into the festival season, I see a strong demand and the possibly a margin uptick also in the next quarter or two. So remain invested.
Invested. That's the clear conviction that perhaps these issues are transient because the managements are talking about revenue growth being strong and of course a reversal potentially in Q3, Q4. So stay put, deal with the volatility. That's the view coming in. What else is happening in the market? Well, it is Motilal Oswal, which is up a solid 12% right now. You have Anand Rathi Wealth, which is up 5%. Paytm has managed to perk up quite smartly right now. So that stock too will come up for you on the screen. Some of these names definitely doing well in the trading session. What's been the reading so far of the IT sector suggests that there is some improvement in demand environment, but the share prices have run up. Naresh, what's the view on the charts then? Because all of these stocks and the top IT companies have run up 20 to 30% in the last 5-6 months itself. Do you see a correction now or do you see further up move?
So out here, continuing to see divergent moves. So today there is a LTI-Mindtree which is down. Then you have Infosys which is down. At the same time, you'll see some other names like HCL Tech which has continued to do well, or an HCL Tech which continues to hit 52-week highs. So out here, it's a buy only on a sharper dip. So you see a 10% correction on the stock in the IT names, then maybe you can get in because they've already moved up 30% across the board from the election day lows. So out here, the risk reward is not great to chase right now, but it remains a buy on dips.
On dips, that's the call on IT. In fact, let's hear out from all of those IT majors and what the managements had to say post their numbers.
North America and Europe, we see good, UK, we see good growth in banking. And capital markets has been weak. Insurance has grown, and regulations and risk and compliance has also grown in banking. Europe, it's more or less very similar trend. UK, again, the capital markets has been a problem, but also good thing is banking is coming up, insurance is coming up. So, which we hope will sustain in the coming quarters.
So we see financial services, the discretionary spend is looking stable, strong, especially as we highlighted in capital markets, cards and payments. We also shared that in automotive, we see slowness in Europe. In the other verticals, the the discussions with clients are similar. So we don't see any change.
At this point in time, based upon what we have seen in the last couple of quarters, BFSI, specifically in the US, we are seeing good momentum. And in quarter two itself, we have seen a growth coming in from BFSI. The second part of it is some of these deals that we have won, some of the opportunities that we are getting are consulting-led, leveraging Capco. So that also obviously reflects some of the discretionary spend that some of our clients are doing. So net, I think it's right now it's positive. I can't predict what is going to happen 6 months, 6 quarters from now. But as of now, from the vantage point I think we are seeing a good momentum in that sector.
Like a normal quarter where incrementally the demand was better. So services overall revenue came much higher. I said last quarter that all the verticals will grow sequentially except financial services, which was going to decline because of the State Street JV divestment. But even if you kind of exclude that, financial services has grown the strongest.
Kunal Bothra as well joins in on the show. Kunal, what is it that you're making of this rebound that one is seeing?
I think it's a good rebound, much needed relief for the markets after the last 2-3 days of this sharp sell-off from 25,200 odd levels, which started off in this phase of in the early phase of consolidation. I think it's a good relief, and this reinstates the fact that 24,750 mark is not just a nominal support for the index; it's a very strong support. So even though there was an intraday breach of the 24,750 mark, but I think on closing basis, looking at the current prices, we should be holding on to that level, which means we could be looking at a solid base for the index. And now the best part about the charts for the indices is Bank Nifty forming a bullish, engulfing pattern. This is a very strong candlestick pattern for Bank Index or the Bank Nifty, and this indicates that today's low of 51,000 odd for the Bank Nifty should be a very strong base. That should be a stop loss from a near to medium term play for Bank Nifty traders, and we could be looking at higher levels, much higher levels, even from current zone for the indices.
Okay, so That's a take coming in as far as the banking index and the market setup is concerned at the moment. Let's pull up the intraday chart of Z Entertainment. That stock should come up for you on the screen. The numbers have just hit the screen. The total number in terms of income stands at around 2,034 crore. That compares with 2,510 crore that the company reported last year. Even if you look at the profitability figure this time around, and I'm looking only at profit for the period from continuing operations, that stands at 210 crore versus 130 crores. So the profit from continuing operations has almost doubled on a year-on-year basis. Even quarter-on-quarter, there has been a big improvement. There is an exceptional item, but the exceptional item is just 11 crores, so can't really put the entire performance to that. The advertisement revenue has actually gone down on a year-on-year basis, but the subscription revenue has gone up. And that is what is, I think, supporting the overall sentiment for Z Entertainment right now. So the profit for the period and the profit from continuing operations has gone up. There is an exceptional item to it. Advertising revenue is a bit flat, but the subscription revenue has jumped up. And that explains the bit of a reaction that we are seeing. The consolidated PAT up for you on the screen, 208 crore, coming in 209 crore to be honest on a consolidated basis for the entire period as such. Before we move forward, a quick word on the chart check of this one, Naresh. Would you have a view?
The stock has continued to be in a downtrend. 125, 130 is the last support which has been there, and that was also the low back in COVID. But till the time it doesn't break out above 145, the recent swing high, the trend still remains weak.
Okay, that's the take coming in on Z, reacting to its earnings, quite a bit of spike up coming in there. But let's talk about not equities, but a different asset class, which is also, shining pretty much on a daily basis. And gold once again has managed to hit an all-time high. Let me take it across to Ashesha and get in more info on whether or not these gains are going to sustain for the best performing move that one has seen in Ashesha, 14 years?
What a run it has been. In fact, over the last 1 month, gold prices have risen nearly 5% and on a year-to-date basis, gold prices have risen over 30% and gold has reported highest ever returns in the last 14 years. Let's talk about several reasons. Rising geopolitical tensions, dovish commentary that has been coming in from central banks globally are some of the reasons why global gold prices continue to surge. In fact, it's not just about global prices. Prices on multi-commodity exchange or MCX have also risen exponentially, and gold now trades at about 77,000 rupees per 10 grams on MCX as well. Remember, strong buying by domestic investors back home in India on account of upcoming wedding season is one of the reasons why gold prices continue to surge in the domestic market as well. Let's also talk about some commentary that has come in from global brokerage houses and global associations. So London Bullion Market Association believes that gold prices could cross $2,940 per ounce over the next 12 months. UBS meanwhile also continues to remain very bullish on this yellow metal. In fact, they expect gold prices to cross $2,750 per ounce by the end of this year, and that it could touch $2,900 per ounce over the next 3 to 4 years. So brokerages globally continue to remain very bullish, and gold yet again at another record high.
Gold yet again at another record high. The other thing that we just wanted to highlight on Z Entertainment is the reappointment of Puneet Goenka as the Managing Director and CEO for a period of 5 years up till December 31, 2029. So that's just the additional detail coming in. But I wouldn't call it as a big surprise given how the other, how the entire setup has really panned out with Z Entertainment. Shifting focus away from that one then and talking about the IT companies a bit more. Just wanted to get a sense from you as well, as to what the overall take is with respect to the IT sector right now, because we did hear the management of LTIMindtree talk about how Q3 is going to be a bit more volatile. They are expecting the second half of the year to be a bit under pressure. Nischal, what's your take on the IT sector?
So, Anisha, I am very bullish on IT sector actually. I think the worst is behind us. Yes, the stocks have run away, but you were just seeing the first signs of recovery in the US. And if you really look at it, you had put out all the 4 people, all the 4 of them have spoken about BFSI sector doing reasonably well or better than their expectations. Now, BFSI itself is more than 50% of revenues for most of the companies. So if that has started turning around, I think it's really good for the IT sector. And we have started seeing interest rates cuts happening. So that's where I think the discretionary spend should also start going up. So hold on to your IT. At every dip, I think IT is a buy.
Right. Okay, Nischal, great to have you on the show. Thanks as always for taking the time out and joining in. Let's just see where the market is now settling in at as we just got half an hour more to go before we wind down for the week. We're holding on to the gains so far, at least about a 0.5% uptick. But I think what's more meaningful is the kind of move that you've seen from the session lows today. Axis is now scaling up about 5.5%. Wipro is up 5% right now. And some of those beaten down auto names are the ones which are seeing a marked recovery too. So Eicher, for instance, is one name which is holding up 3.5%. There's Tata Motors, which has climbed up about 2%. But what is Bajaj Auto up to? While it's recovered most of its losses, but it's still not sprung back into the green, still lying flat as we speak right now, and so is the case with Maruti too. Naresh, do you feel that there could be further weakness in the auto pack in the days ahead, or do you think, an Eicher and a Hero MotoCorp at least, along with the Tata Motors, are safely out of the woods?
So I would say Eicher Motors is out of the woods given the fact that it has not rallied in the last 1 year like the other names. But if you look at a Hero MotoCorp, Bajaj Auto, Tata Motors, they've all gone up 100% plus in the last 1 year. So they could get into a sideways phase, not really a further sell-off as such, but a sideways consolidation after a little bit of a bounce given the last 2 days of fall in Hero MotoCorp. But I would still like Eicher Motors out of the whole pack.
On that note, let's take some closing strategies too. Kunal, what's on your list?
So I'll go with the banking major. ICICI Bank, after today's move of a couple of percentage points, the stock bouncing off from that 12.30-40 mark. This could be now considered a very strong support. And we could now be looking at the stock coming back to the previous highs of 1340, 1350 approximately. So it looks attractive at current levels, especially in terms of risk reward.
Right. Naresh, what about your closing ideas?
So that would be a buy on Tata Steel. The stock has corrected from 170 all the way down to 150 over the last couple of weeks. A good base around that 145, 150 mark was also the election low. So looks like a good risk reward entry point. Would keep a stop loss below 150 and expect a bounce back towards 170.
If you like this video, then like, share and subscribe to ET Now.